everyone, and welcome to this week's Market Bites episode. My name is Brett Kenwell. I am joined by Neža, and notably, neither of us are joined by Sam North, who's still enjoying some much-deserved time away as we go into 2026 and wrap up this year's 2025. Neža, how are you doing?
Hi, Brett. Yes, I'm doing well, thank you. This is our last episode for this year, so I'm looking forward to holidays, to be honest, and hopefully we will see Santa rally as well. How are you doing?
I'm doing great, and I'm also hoping we have some calm, at least some calm markets going into the end of the year. If we're really lucky, if we're really good, maybe we'll get some nice rallies too.
But yeah, this week was quite turbulent, also because all of the data that we got. Do you have any insights on that? This is one of the topics that we will cover today, right?
Yes, it is. So this week we're going to look at the deluge of data we've gotten over the last couple of days and are set to get for the rest of this week. Notably, it comes 1 week after the Fed's most recent meeting. I'm sure they would have really enjoyed getting this data beforehand, but that's the way the calendar unfolds sometimes. And after a brief discussion of that, we'll go into our year-end discussion and sort of what we're looking for, our bold predictions for 2026. So when we look at the data, so yesterday we received the retail sales report for October and then the November and October monthly jobs reports. So when we look at those, my takeaway from it was kind of a mixed bag. October jobs came in well below expectations, negative 105,000 jobs as the headline print. When we looked at November, it came in a little bit better, it came in above expectations at 64,000 jobs, but notably the 3-month average change dipped negative, and unemployment rate, it continued to creep higher. It hit 4.6% in November. That was the highest reading since September 2021, so a little more than a 4-year high on the unemployment rate. That's been moving really steadily higher since June when it was at just 4.1%. So very clear to me that the jobs market continues to cool. It's not exactly suggesting to me that it's collapsing, and particularly in the U.S., there's a lot of moving parts, politically and with immigration and that sort of thing. So I think that does play a mix. And then, of course, the government shutdown was 6 weeks long. That's going to have an impact on the jobs report, although the BLS, the Bureau of Labor Statistics, said it's hard to quantify the impact of the shutdown. So there's a lot of moving parts in these jobs reports. I guess, to me, the good news would be we're not falling off of a cliff. The bad news is we do continue to cool. So that's kind of one interesting component. The other was retail sales, which even Chair Powell, he referenced a strong consumer at the last Fed meeting as sort of being the thing that's holding this economy up and pushing us forward. It's really the resilience of consumer spending that's helped quite a bit. And that report had some good news too. That was for October, so it is a bit dated, unfortunately, but it's the data we have to work with. So the headline figures were below expectations, but core retail sales, which strips out some of the more volatile components of the report, beat expectations, while the control group sales, which is the little slice of data within the report that is actually used to calculate GDP, came in well ahead of expectations. So there were some positives on that front. To me, it shows the consumer still pushing forward, and we know that the consumer is facing headwinds. Inflation continues to inch its way higher. That's certainly impacting consumers, particularly in the lower and medium spending bands. And consumer confidence continues to sag. It's really been, confidence is under pressure since April when we had all the volatility with the tariffs. And then, of course, the jobs market cooling is not making anyone feel better out there. So sort of a mixed bag there. I'd say maybe a little bit better feeling with that than the jobs report overall. But is there any takeaways, Neža, that you kind of got through this data? Or are you kind of looking forward to the inflation report tomorrow?
You clearly covered very well what happened until now. We were really waiting for all the data, and I think that Fed was also looking forward to that, because right now everyone was kind of in this we didn't know what was really happening in economy since we didn't have any numbers. So even though they are a bit dated, it is still good that we finally have something to work with. So yeah, but I'm waiting the most for the CPI that will be released tomorrow, because of course inflation is the most important data Federal Reserve has to work with, because yeah, if inflation shows signs of cooling, it supports Federal Reserve to be more maybe more positive and cuts even faster, or we could expect more cuts sooner. But if inflation stays sticky, this could complicate everything, because right now markets are still betting for soft landing scenario, so cooling job, resilient consumer, and inflation that gradually comes down. But yeah, I think that we will have to see that the next year. We already made some bold predictions around inflation and interest rates in episode that was recorded last year at the same time, and one of our bold predictions was actually that there will be no cuts this year. I think that Josh said that. This was really a bold one, but it, of course, it didn't pan out. But it would be an interesting year if we didn't have any cuts, right?
Yeah, absolutely would be an interesting year. And, you know, Josh was probably feeling pretty good about that bold call about halfway through 2025. It wasn't until, much like 2024, it wasn't until the back half of the year we ended up getting a handful of cuts.
Yeah, that's right. But to be honest, we were a bit more right with other bold predictions that we made last year, because last year was it was kind of funny, and of course no one knows what will happen in the following year. But I remember that Josh also made one good prediction. He said that he expects mining companies to finally rebound, and that he was right about that. Just looking at the gold miners, for example, they're one of the best performers this year. Some stocks are up more than like 150%. I think that's Gold Barrick is up like 160%, and also miners like BHP, they're performing well. So he was clearly right about that. And yeah, I also made some good statements. I kind of predicted that small caps will perform well. I predicted that they will outperform SP 500. I was not right about that, but still they were not performing that bad. And on the other side, I also said that China stimulus will be one of the key themes for 2025. And just looking at the numbers and how Chinese companies performed, I could say that I was quite right on this side. But Sam's predictions, he actually captured the mood of 2025 best, because he talked about how rates and inflation narrative will change during the year depending on geopolitics and tariffs and optimism and growth. So he really captured the vibe of 2025 correctly, because we didn't know even in the middle of the year what kind of interest rates decisions we can expect on the next meeting. So he really captured that right. I don't know, how was 2025 for you?
Yeah, those bold predictions it's a tough prediction when you have to put bold in front of it, right?
Yeah.
And try to make something that's a little more, outside of the consensus, more of an outlier expectation. And when you look back on 2025, I mean, it's been a fairly chaotic year. I mean, it feels like it turned out okay. It did turn out okay, but this actually it's fitting, because in early April we were all together as an analyst team, and we were watching the S&P. We were coming into our meetings with the S&P down 4 or 5%. The VIX was exploding higher. So I think for me, the biggest takeaway from 2025, the biggest surprise, was the lack of volatility once we got out of that period. The VIX dove back below 20 in, I think it was the second week of May. Mid-May, it was back below 20. Markets weren't back to all-time highs yet, but they were on their way to doing so. And then we just got through the summer, which was just a sort of, slow, steady rise, higher and higher. We got through September, August and September, the seasonally, tougher stretch of the year. We got through that, no problem. And ironically, we got to the best seasonality stretch of the year, November, and markets took a little bit of a tumble there. But I think the lack of volatility was the most surprising. We didn't really have any notable pullback outside of April, And then, of course, we had a 5% correction in November, but that's just a routine dip. I mean, on average, we get like 3 of those a year. So I think that's what surprised me the most. Is there anything, what stuck out to you?
I mean, yeah, when April correction really surprised us all. I also remember we were there in Paris having all the meetings and everything, but meanwhile market was basically, I wouldn't say crashing, but there was a major correction and no one knew what will happen next. Based on that, I would expect more corrections in 2025. And I think that market was kind of waiting for the next correction to happen. And there was kind of a strange year that was constantly somewhere between fear and optimism, because on one hand, there was always this AI excitement and productivity gains, and economy was just refusing to lose any strength. And on the other hand, there was consistent worries about inflation, about tariffs, geopolitics, and also scratched valuations. Valuations were pretty high, especially on tech sites. So yeah. Markets were kind of between greed and fear, I would say. But based on that, I would expect a bit less optimism on the markets. Because just looking at how major indices performed, S&P 500 is currently up about 16% year to date, and Nasdaq is up 20%. I wouldn't say that this was a bad year at all.
No, I don't think anyone can make the argument that it's been a bad year by any means, especially when we consider how well the markets have done the last 2 years. This was sort of a cherry on top for year number 3. And as we look forward to year number 4, as we go into 2026, Neža, any bold predictions kind of popping up on your radar? Anything you want to throw out there?
You know what? It's difficult of course, it's difficult to say what is going to happen, but I will make a really bold one. I was thinking a lot about it, and I will say that US inflation will re-escalate, because everyone kind of expects that inflation is under control, that it is slowly cooling down, that Federal Reserve got it under control. But I will state the opposite. I will say that it will re-escalate, and that will maybe cause some corrections, some bigger correction on the market. I think that wages are still running a bit hot, and housing, it maybe isn't as cheap as it could be at the moment. So yeah, I will kind of state that I would expect US inflation to re-escalate just a bit. I don't know what is your thought about that, or maybe what is your bold prediction for 2026?
I did not realize that my bold prediction was going to be the same bold prediction you made a year ago. But mine is that small caps will outperform large caps this year. The Russell will outperform the S&P. It's only happened, I think, twice in the last decade. The last time was COVID. It outperformed the Russell outperformed by, I think, 2 percentage points on the major index. So it's like 18.5% versus 16.5%. But small caps have some things working in their favor. They have outsized earnings growth predicted for 2026. Lower interest rates are helping with margins and cash flows, helping shore up their balance sheets. And unlike large caps, particularly mega caps, small caps really need those lower borrowing costs to help their cash flows and their bottom line. Whereas, I think some of the mega caps, they want lower rates for cheap borrowing, but they don't need it. They have the cash flows to support their business without dipping into, without going to the bank. So to me, I'm looking to small caps optimistically. I don't know that they, certainly not the trend that they have outperformed large caps, but that's what I'm going to look for my bold prediction next year.
Actually, if I wouldn't make this prediction last year, I would make it this year as well. Because anyway, if interest rates go lower, this is supporting small caps. And as you said, financing conditions are easing. Also valuations, we could say that valuations are more attractive in small caps than with large caps at the moment. And also earnings expectations for small caps are quietly improving. So in this kind of environment, small caps might shine. And anyway, this year they didn't outperform S&P 500, but they still performed pretty well. So it might be the year to shine. 2026 might be their year to shine.
Yeah, and you mentioned interest rates and how that affects small caps, but one I did read one sort of I think bold prediction that's outside of our universe. It came from the Bloomberg economists actually, but on the day of the Fed meeting last week, so December 10th, they published a report saying if the Fed, regardless of what the Fed says in their projections for 2026, they think they'll say one cut, which they end up saying. And despite the fact that the market's only pricing in two, they expect 4 rate cuts next year, which I mean is certainly possible. Certainly, if the labor market cools down faster than we expect or than it is right now, and it's certainly possible if when we get a new Fed chairman in, if he ends up being far more dovish than sort of the committee members are now. We could get to 4 cuts, but 4 to me seemed, when I read that, I thought that was bold. I thought that was a bold call.
Yeah, that's right. But it's a good thing to mention. One even bolder prediction that I always like to follow every year actually are Saxo's Bank outrageous predictions. They're not bold; they're really outrageous. I don't know if you follow them, but. There were few for 2026 that really stood out for me, and like one, for example, it was really fun on the surface, is that Taylor Swift wedding will boost global growth, because it sounds a bit silly, but idea behind it is actually quite interesting, because it is a big cultural moment, and it kind of predicts that it will push Gen Z back to real life, more relationships, more marriages, more babies, more homes, and if their behavior changes to that, spending will shift too, and it was actually that it will boost economy. So they're really outrageous predictions, but maybe if this happened, we could see a clear change in economy. But I really like the 2 of these outrageous predictions. One was that the dollar will be challenged by a gold-backed currency from China. So that the idea is that not that dollar will disappear, but that China will offer an alternative. Basically using and that will be backed up by gold. So yeah, it's kind of interesting prediction. And another one, that dump AI will cause a massive cleanup, not any evil AI, but just badly managed AI. So yeah, that they will make some kind of mistakes, and all of that will make a huge mess and a final cleanup. So none of them probably will happen, but I don't think that's a point. It just gives us a broader perspective on how to think about economy, because you never know what can surprise you next, and even if they don't play out, I think that we will definitely see some surprises in the next year.
Certainly, and those are some fun ones. Hopefully, maybe Taylor will be one of the bold catalysts for 2026.
Yeah, I wonder if we will mention her name again in one of the Market Bites episodes.
I'm sure. Yeah, we'll have to get an internal Polymarket reading on that. See if we can see what the over under is for it.
Yeah, definitely. So, do you have any other predictions for 2026, or do you think that's all for the episode?
I want a prediction somewhere around crypto. It just feels like saying that I think it's going to do well doesn't seem bold enough, because it has such a tendency. Bitcoin has a tendency to do so well over long periods of time. But how we're going out on the year, I mean, granted, there's maybe about 2 weeks left in 2025, but it has not been a fun couple of months for crypto folks. Yeah. I want to say that Bitcoin makes new all-time highs in 2026, but that to me it doesn't feel that bold. But that's sort of where I'm gravitating towards. So that's sort of my look into crypto, I think.
Also, I just remember that Josh made a statement around crypto last year that he said that there will be more rules around crypto, and it will be just start of a bull cycle for crypto, that it will start with 2025, if I remember correctly. But yeah, we saw that at the moment, at least Bitcoin, that I'm following more closely than any other, is not performing that well for the year. But stating that it will reach new all-time highs, I think that this is a possible thing to happen. But yeah, we will see.
We should have roped Josh into this one. I'm not sure what his time zone is for this time of the day, but we should have pulled him in and gotten some new predictions from him.
Definitely.
Well, if that's all we have for predictions for 2026, I guess we're going to wrap this last Market Bites of 2025. So we want to wish everyone a happy holiday, a happy new year, and we'll see you in 2026.
Thank you for everyone who's been listening us in 2025. I hope you will all have a calm holiday spent with your family, and see you all in 2026.